Hello, my name is Chris Shea. I'm a financial advisor with BPS Financial Services. This is going to be a presentation on borrowing basics. What do you want to learn about borrowing money? What do you want to learn? So we're going to do a couple things here. We're going to have the agenda, the ground rules. Essentially, the ground rules for this are listen in, got questions, reach out, ask me. I'll get back to you and hopefully give you some better guidance for your specific questions that you have for yourself. And I'm going to introduce myself again. So the objectives here, define what credit is and what a loan is, distinguish between secured and unsecured loans, identify 3 types of loans, costs associated with getting a loan, what do lenders use to decide whether to give you a loan or not, installment costs are less than rent-to-own services, explain why that works, where you have rent-to-own, payday loans, refund anticipation, why those things might not be in your best interest, and how to guard against predatory lending practices. So again, my name is Chris Shea, financial advisor with BPS Financial Services. I'm a financial planning and implementation partner with my clients. I help them educate them on how much money works and what might be their best interest, and then help implement that plan to get them to where they want to be. So first off, what do you want to learn about credit? Ask a financial professional about what credit is. You could get a multitude of answers. Money given to you that you do not have to pay back. Money you borrow, pay for things, but must also pay back. Recognition for a job well done, or the scrolling text at the end of a movie. All definitions of credit. Which one do you think that they would say? Borrow money to pay for things, but must also pay back, right? You've got to pay your money back when you take out credit. Credit is just simply the ability to borrow money, sometimes called a loan, but you are making a promise to pay the money back. When you have good credit, it's easier to get more credit because it shows that you are able to repay your debts. You want to work on your credit score. We've got a whole presentation on understanding credit scores and how things can impact it. I recommend taking a look at that if you want to improve your credit score. Why is credit important? Convenient when you don't have cash. You might have a car problem that pops up and you don't have $1,500 in your pocket. Credit can help with that. It can also affect your ability to obtain employment, housing, insurance, depending on how it's managed. Again, it's useful in times of emergencies. Sometimes you might have to get on an airplane to visit someone in a rush. Having a credit card can help with that. Don't abuse it, use it. And it also allows you to purchase things over time. Think of a house, think of a car. You've got a mortgage, you've got a car loan. Helps to pay for things over time. Credit's used for that. Collateral. That's security on an asset or assets you pledge to the lender. Again, mortgage, car payment, loan for a boat. All these are collateral. Put jewelry down. If you don't repay your loan, lender is entitled to take and or keep the collateral. So you don't pay your mortgage, what happens? The bank takes the house. Got to find someplace else to live. Okay? Don't pay your car loan. They're going to come collect your car. Got to find another way to get around. Collateral. Credit terms. Secured loan. Loan in which the borrower offers collateral for the borrowed money. Again, mortgage, car loan. Unsecured loan. Loan that is not secured by collateral. Think of this as a credit card. Usually when there's a credit card, the unsecured loan has a higher interest rate to make sure they get their money back. An asset is something valuable that you own. Again, a house, jewelry, car, boat, lots of things can be assets. Art. And the guarantee, again, is a form of the collateral that you're guaranteeing that you'll pay it back. Otherwise, you lose your stuff. Very important to make sure that you guarantee something that you can afford to pay off so you don't lose it. Consumer installment loans. These are used to pay personal expenses for you and your family. That's it. You got to pay for things consumer installment loan. Again, this is kind of like a credit card. Okay. What are some of the other reasons for obtaining a student consumer installment loan? Well, you might have to buy something. It might take time. You might not have the down payment. Okay. Again, that's the biggest reason. Personal expenses for you and your family. Again, we're talking about credit cards. Give the ongoing ability to borrow money for your household, family, and other personal expenses. They can be risky, though. Could be overburdened with debt. I know people that have credit cards with 15, 18, 20, 25% interest. That means if you owe $4,000, you're going to have 25% of that on an annual basis. You're going to earn an extra $1,000 in a year. That can burden you. Make sure your credit cards, you're aware of the terms to put you in the best position to pay back your debt. Home loans, home purchase loans, mortgage, refinance loans. Refinance your mortgage, can take money out, again, replaces a primary home loan. Home equity loans, they can be called a second mortgage or just a line of credit that you have to take out against equity that's in your home. They can be used for a multitude of things to help with challenges in your personal finances. They can be used to pay off high interest credit cards. They can be used for home improvement projects. You got to see if it's in your budget to afford the home equity loan, but they can be a good thing for you if you do own your home. Home equity. A lender can allow you to borrow up to a certain percentage of the home equity, generally around 80%. So if you think of a home, it's got, in this example, $250,000, $200,000 of debt, equity is $50,000. Well, you've already got 80% of your home is in debt. You really can't afford any home equity loan on this. You've got to have a more like a 50-50, 60-40 ratio. Then the banks will start to consider it. And if you've got your home almost paid off, they'll most certainly take a home equity loan. Know what your debt is on your home, know what your equity is in your home, and know what the value is in your home. Give you some flexibility around home equity loans. There's an activity participation guide. Activity 1, what's the best loan? We're going to ask you to fill in the blanks on this to figure out what's most appropriate for you. And then explain your answers if you got some friends, or if you want to reach out to me and talk about it, I'll be glad to do that as well. But fill it out, answer the questions, quiz yourself. Cost of credit. Lots of cost of credit. Fees. Fees charged on to the credit activity. These are how the banks and other institutions pay their employees through the fees and the loan application and servicing the account. Interest, the amount of money you owe in and above the actual principal amount that you borrowed. We fixed variable interest rates depending upon what you choose in terms of your credit. You might even have an annual fee on your credit cards that you have to pay. Know what the fees are, know what the interest is, know what the overall cost of doing business with this institution is, and decide if that's in your best interest. Truth in lending disclosures. The government has realized that there's a lot of challenges with credit being offered to people and people being taken advantage of. So it requires banks to disclose charges so you compare the actual cost of borrowing. This gives you, the consumer, the power to make better choices. That's what it's all about, making better choices as a consumer. Lenders have to disclose the amount financed, annual percentage rate, finance charges, total payment over time. If you got credit cards, they're going to have to show you the minimum payment due, and then if you add money, how much you're going to save in interest. You're going to see that in your bill. Look at it, get yourself educated on it. Activity 2, borrowing money responsibly. Read each question, answer the question, be prepared to talk to somebody about it. Or again, you can reach out to me and we can have a conversation about what you want to do. Okay? But think about it. Think what's in the best interest, short-term and long-term, for financing. Rent-to-own services. Rent-to-own, they set up a payment plan for you. They own the item, until you make the final payment. So you're just kind of renting it. They can take the item back if you miss a payment. So you could have a 4-year rental, rent to own, pay for 3 years and 6 months, miss a payment, and they've got to take it back. Sounds like it's in the best interest of the company renting the item, not the renter or you. Think about rent to own services. Figure out if you can actually save the money in advance to pay for it. You'll also probably wind up with a cheaper cost on that. Payday loan services. Short term, these are costly loans, right? You can have a payday loan, $230 to get the money out, plus an additional fee. Make sure if you got a payday loan, you're fully aware of the costs on these, because the interest rates can be very high on this. We actually have a whole presentation. We go through the details of it, but it could cost you more than you anticipate in terms of an annual percentage rate than getting a loan from a bank. Okay. Again, here's one of the examples. Loan amount, $200, 2 weeks, $30 fee. Write a check for $230, 391% APR. Very expensive. Refund anticipation loan. Hear these all the time around tax time. Total refund amount is going to be $1,500. Fees are going to charge $300. You're going to get $1,200 back. Lender keeps the $1,500. You've paid $300 to get your money a little bit early. That could be really expensive and costly in terms of an interest rate for you. Take a look at it. Again, typical costs, $100 for preparation, refund fee, $75, electronic filing documents. Again, $248, you get the full $1,500, $248 less than $300, could save you some money. Again, think about it. Just be aware of the implication of your choices. Need to borrow money fast. Hopefully you have an emergency savings account so you borrow from yourself first. Can't do that, comparison shop. Look at total dollar cost and APRs on interest rates and short-term loans and credit cards. And then check out emergency cash options with your bank. Talk to your bank. They want to help you. If you have a bank, they are definitely in your corner and they want to make sure that you are in the best spot possible. They can offer short-term loans at a cheaper rate than going to a payday loan services, right? Where do you get the money? 2 weeks of payday, credit cards maxed out, car breaks down, meaning only a few $100s to get through it. Your bank may be able to help you better than someone else. Credit, capacity, capital, character, collateral, 4 C's of credit. Capacity is your ability to make payments. Capital, value of assets and net worth. How much are you worth? Character. So then how funny you are. It's have you paid your bills on time in the past? And collateral, something you use to secure it. A home, a boat, a car, jewelry, whatever the case may be. Those are the 4 C's of credit. We have a whole presentation on credit. Get in great detail. But capacity, how long have you been at your job? How much money do you make? What are your monthly expenses? Do you have the ability to take on extra debt? You don't want to find that out. Capital, how much money do you have in the bank? Do you own a house? Do you have other investments? What are you worth? That's a question you got to ask. They're going to look into that when you look at getting something. Character, how have you handled credit in the past? How many credit accounts do you have? If you have a lot, they might look at that badly. If they have a few, they might look at it badly too. You got to have a good amount, but not too much. Have you ever filed for bankruptcy, judgment, late payments, property repossessed, foreclosed upon? All these are going to be things that look into your character of your credit. Make sure you're up to date. Make sure you know what your credit score is. If you need to, you can do an annual credit report, see what's on there, see what's keeping your credit from potentially being as good as it possibly could be. Collateral. This is where you put something up in exchange for the money. Think of a home. Do you have the ability to make the payments? You got to read and understand all the conditions. Shop around. Different companies are going to have different rates and different options in terms of being able to repay a home or a car or something like that. Look what's in your best interest. Don't just go with the simplest and easy option. It may wind up costing you more in the long run. Now we're going to get into predatory lending practices. These are marketing tactics, collection practices, and loan terms that deceive and exploit borrowers. The government really wants to crack down on this because it's harmful to the economy overall. All right, they're usually more expensive than other loans, and the repayment terms are things that you probably can't meet. They're going to be excessive. The government wants to know about these. You can report them, see if they're predatory, can help out. I mentioned annual credit reports. You can get a free credit report at annualcreditreport.com, the 877 number, or there's a PO box in Atlanta you can mail to. Do a Google search, annual credit report, free, come up. Make sure you don't go for the ones with the ads. Make sure you actually go for the free ones to get your free annual credit report. Hopefully now you've learned a little bit about the basics of borrowing. It's probably spurred as much questions as it has knowledge, but this should be putting together the basics of borrowing for you. If you got questions, feel free to reach out. Want to evaluate the training, give me some tips. Always happy to hear from people to improve my presentations. And again, hopefully about this, you've learned what good credit is and what it means to you. Hopefully learn what secured and unsecured loans are. Secured has property, collateral. Unsecured, they don't. Learn about types of loans, cost of using credit versus using non-loan services, how creditors make their choices, and you've learned a little bit about predatory lending practices and how to avoid them. So with that, I'd like to thank you for your time on Borrowing Basics. Chris Shea, Financial Advisor. Look forward to hearing from you if you got any questions.